I'm Stacy McBain with Swope Investment Properties, and here's the summary, the gist of what's going on in the market. We have pent-up demand. After a winter of lackluster inventory, the buyers have come out, the spring sunshine came out, and everyone's ready for their purchases, but the inventory is lagging a little bit behind the ready buyers. So that's helped generate some multiple offers for people who are in the market to buy and just some eager buyers. We're still seeing negotiations, as you just heard. There's still a little bit of concession either on price in some cases or on condition. It's neither a strong sellers or a strong buyers market at this time. For investment purchases, the downward pressure that we've just had over time on cap rates, and then now with interest rates increasing and really squeezing return on investment, the clientele, the percentage of our investor business has gone down. It's been replaced with single family home buyers. But one steady holding investor that's out there right now are parents who have kids and would like to see their kids live in Boise with them someday. And that's a group of folks who's definitely buying homes still for rental properties. And there's still 1031 money out there, and there's still investors out there, but we just don't see the opportunities for picking up properties with low money down like we once did back in the time. Those higher rates, they impact cash flow, and this is what they look like. I'm going to reshare that screen again very easily. Oops. I gotta do this share thing first, right? We practice this just because I'm like, it's always so hard. And then, it's only hard when there's people watching. Okay. Great coaching support. Thank you. Okay. So this is what the rates look like. Dave Rusk at Idaho Central is a great resource, and they've got good rates, and you're looking for 20% down. You're in the low sixes, but if you get creative and go for an ARM loan, you can get into mid fives for a single family home buyer, and investors are paying in the low to mid 6% range right now. So that squeezes those returns, but a 40% down in either case, investor or home buyer, really saves you some interest. And when it comes to those investments, it takes about 40% down to even break even right now. So that is the modern down payment to strive for. And as Ted Jones said in the recent economic forum, don't bank on cheap money, but those 10-year treasury yields, they do show us exactly the trajectory of the rates. And here's what those are looking at like. They're up just a little bit, but we're down a little bit from last month. So they've kind of been flexing a little bit, but hanging out around 6. We also had a really interesting commercial real estate report come across our desk from Cushman and Wakefield, and they had some great data. And some of this data, I think will, it'll be interesting to see how it compares with yours, because I don't know, it's going to probably be there's always little differences, but we talked about market fundamentals of our market. And Boise in the Treasure Valley is the area in their report, led the nation in annual population growth at 2.1%. And there's future expansion of our population anticipated. Obviously, growth is healthy for an economy like ours that's been building. We've had elevated vacancy recently, but it's stable, and it's expected to decrease again. Good for filling units, and demand has been keeping pace with supply. So we've seen all of these new units coming online, but they're reporting that demand is keeping pace with supply, and that we've had overall positive net absorption on those new units. And you can see they're reporting a 5.4% stabilized vacancy rate among stabilized units, and a $1,700 net rent. Meridian and East Boise really led that absorption. There were a lot of new units, and I don't know how to make that go away. Sorry, guys. No. There's a cool little bar graph at the bottom of the screen, and you can see the units constructed is more the teal line and how high that was a couple of years ago. And then the units absorbed or rented out is that dark blue line. And we're only in Q1, so.
How do that?
And the effective rent is basically rent minus concessions. So if in those new builds particularly, they're trying to fill them and oftentimes offering concessions. And we've had a 3.2% year-over-year growth in rent, which the rent per unit is are the blue bars, and the teal line is that absorption. I mean, the growth has been such a big story. We've all been seeing the units and just wondering, can people afford them, and can the market absorb them? And so when we look at income, there's been a 3.6% climb in the median household income. And so almost 94,000 is the median household income now. And it's expected to rise. And I think that Boise was the 8th lowest unemployment rate among the US markets that they were looking at about 3.5%. And so we have strong employment, which is very positive for our economy. So things are looking really strong.
Household income, does that include one or two earners?
I mean, I don't know. Does anyone know the answer to that question? Median household income. So it's
Household.
yeah, so it's both. The average. I mean, we have a lot of double income people if you know, a lot of both people work, but there's single member households and double member households. So is it per person? No, it's per household.
I think in Idaho it's like 2.4 people per house.
Right.
Yeah, something.
Mhm.
So yeah, it's for multiple.
Oh, yeah, okay. Well, so then that, if it is, yeah, if our average household is 2.4 and the average income is 94, then that brings it closer to what I remembered the median income being, which was about half of that, perhaps. So, okay. Good question, good point. Thank you, Michaela. I'd like to bring Danielle up for the single family home residential update
Thank you.
and the Canyon County update.
Yes. So what I did this month, normally what I usually do, is I have the year over year documented, but I also referred back to last month as well. So we can see that the days on market in Ada County went up by 5 days, but that is up 19.6% year over year. We did have a pretty big growth in homes sold for 160 up from last month. I'll be very interested to see if that continues. And now we're just hitting the spring market, and that's going to continue to grow. And you can see that is up 19% year over year, but the inventory is up just a tiny hair. For Canyon County, homes sold was nearly 100. So between Ada County and Canyon County, we're up over 100. Ada County having more, obviously. What was interesting was while Ada County, sorry, I keep going back and forth, pricing went up, Canyon County average median sales price went down, about $9,000. Days on market and inventory stayed the same for Canyon County. And I'm just excited to continue to monitor it this month, especially year over year, but to see if we really are truly hitting the spring market, just tap it early. Perfect. And I'm going to pass it over to Jocelyn to go over our short-term rentals.
Hi everybody. I think a lot of you at this point maybe know this, but some don't. So I'll just introduce myself. I am a member of the Swope team, but I'm also one of the owners and operators of Capital City Comforts, and we are a short-term rental management company here in the Valley. And so the snapshot of what I give you is a overview of different markets and how they perform here in the Valley. So this one is going to be specifically for Meridian. And it goes over, so it gives us the sub-market score. So that's a representation of a score from 40 up to 100. So Meridian is at 83. And what that's a representation of, which is really great. I mean, Boise, I think, is at 9 or 90. Actually, I think it was mid 85. Nampa was like 90. It was super high. And so Meridian's kind of just right in the middle of that. The average nightly rate is 176.87. Usually the more square footage in a home and the more beds, the more that you're able to charge per night. So that really makes sense for Meridian because there's a lot of like bigger homes out there, a lot more people booking in one home. So price per night tends to trend up in that way for those bigger homes. And then the annual revenue is about 38,500. And so if somebody was like, okay, give me a brief snapshot of what my home could generate in revenue, you would take your occupancy rate. So the overall average for Meridian is 66%. And then you would times it by the annual revenue to get a very kind of blanket, approximately, this is what you can make. Usually that's not counting the specifics of what makes each short-term rental unique. So, if there's a hot tub or if there's a fenced yard or game room, theater, different amenities that obviously can boost that. So a lot of this is kind of just eagle view. In the center, you see what listings make up each of the homes, or excuse me, how many bedrooms make up each of the homes. So 21% in Meridian are 1 bedrooms, 2% or 9% is 2, 35% is 3, 22% is 4, which is actually pretty high for 4 bedrooms. In Boise, as you can imagine, there's a lot of studios, a lot of smaller, so not quite as many there. And then 5+ bedrooms is 13%. And then you can see the occupancy over the last 3 years. So here in 2026, we're actually about 2.8% lower than we were last year. I think a big part of that is cost of travel right now is really expensive. I grew up in New Jersey and I just booked a flight to go to my brother's wedding in May, and flights are through the roof because gas is through the roof. So I think that we're seeing a little bit less travel right now because the cost, and that's probably a big contributor to the occupancy being a little lower. The next, which is I'll work on making these letters bigger, so I'll kind of just tell you guys what this says. But one of the main questions that I get every time I come up here is, okay, I get an idea of what the revenue is, but what do I pay as a homeowner to run an Airbnb? So I just put up kind of the standard fixed and variable costs that usually homeowners see when they have a short-term rental. So fixed and recurring, you're going to have your mortgage and loan payments if you're financed, property taxes, home insurance, which is usually under some sort of vacation policy. If you have HOA fees, your utilities, and your internet, just because, of course, when we all stay at Airbnbs, we expect to be able to work on our computer, have fast Wi-Fi. Maintenance and repairs, kind of just like any homeowner, if something goes wrong, you fix it. And then property management tends to be a little bit higher for short term than what you see long term, because it's a lot more hands-on. Our average across the 6 properties that we're currently managing right now, our average booking is 3 nights. So myself, cleaners, we're there multiple times a week. And that's typically why you see those higher management fees.
You guys track summer versus winter at 66% when it's higher?
Yeah. Summer, I don't have that data point for Meridian specifically here. I could probably pull it up on my phone and tell you. So let me get back to you on that answer specifically. But yeah, you always see occupancy rates higher in the summertime. People are traveling more. A lot of people who attend BSU, people here for the football games, and just people tend to travel more in the summertime. So occupancy definitely goes up then. Yeah. And then it definitely goes down in the wintertime too. So there's different strategies that you kind of utilize to hedge that curve a little bit. I mean, us specifically, primarily we use Airbnb, VRBO, and then Furnish Finder. So, midsummer, we try to find those, 3-month stays that we can have someone in there a little more midterm to stay throughout the whole winter time. And then when things ramp up again. So
You said summer, but you meant winter, right? Or winter's the 3-month stays and
Yeah.
summer's the short stays?
Wait, sorry. Yeah, so usually since occupancy is down in the winter, we like to book longer stays during that time. Sorry, my brain and my words don't always line up. Thank you for clarifying. But yeah, so there's a lot of different strategies that you can use to make it so not up and down. And Boise and the Treasure Valley is great for that, just because right now we have so many traveling professionals, so it works out pretty well. Any other questions? Wow, you guys made it really easy on me today. Well, if you have any, I'm over here. So thanks, guys.
Nice job. Thank you, Jocelyn. Thank you, Danielle. Appreciate that. Yeah, that's what we do with ours too. We have one Airbnb, one short-term rental, and we historically rented it out for as long as we can in winter,
Yeah.
just keep someone in there, and then whatever the market will bear in summer. It works pretty well.
Yeah.
So inventory in duplexes and fourplexes, Ada and Canyon. We've seen inventory go up, and we'll probably see more listings coming online as we get into the peak of the season. Pending deals went down just a bit, and sales went up a bit, and absorption is all over. So we're just sort of in the in-between season. But yeah, Ada duplexes have 1.2 months supply, and Ada fourplexes have 11.1 months supply, and with Canyon County in the middle. So really, truly all over the place. And as you know, Tony Drost has been running cap rates since, he would say since Christ was corporal, but his cap rate is the 6-month trailing average of cap rates on Ada County fourplexes. And we're going to talk about cap rates again, but they'll be higher because when the assessors run the cap rates, they don't want the tax expense to be also factoring in as a data point, right? So anyway, he's got 4.75% as the trailing 6-month average in Ada. And our gross rent multiplier is around 165. We had 0 fourplex sales sold last month. So this data hasn't changed since. And then the month before, we only had 1 sell. So, but yeah, so the 6-month trailing averages are what we're going to want to look at. And around 900,000 would be the average price without the big data flips. And here's what it looks like in a graph in pretty pictures. That red line is the 6-month trailing average cap rate. And the bars show each month. And obviously the new ones have a lower cap, old ones higher. And here's all that inventory. Here's why that's 11 months supply. We have a lot of inventory active in Ada right now, all over the place. And well, the top one you already heard about, this is shown. And the Canyon County has fewer, just a few. And this is what our above 4 unit supply looks like, active listings right now in Ada. And a lot of times I would put these together, but in this case, we have enough to do 2 separate slides. Here's what greater than 4 looks like in Canyon County right now. So we have some properties trading or trying to.
Wow, well, some of them are 250 days.
100, yeah, Victory Road, multiple phase, a large apartment building project.
Of the not finished.
They're probably finished enough, but yeah, I think they're finished enough, but I don't know how stabilized they are.
Oh, well, it says phase 1 there on one of them.
And so, yeah, all those Victory ones go together in one big complex. So something's done over there for sure, but I'm not sure if all of it's done. So the rental market that we're seeing, that First Rate Property Management, our host, is seeing is low vacancy, good rents, and inventory is moving. With summer nearing, they're predicting a nice, solid, well-performing summer, but overpriced units are sitting. And so price is a big deal. And just because we have a healthy market, if you overprice it, the market's going to respond. They're going to have other options. And that's the one they'll rent. So if you see it if you're not getting much attention on your rental, check that price. And renters aren't rushing, and they are shopping and comparing a little bit. And so we used to see that, gosh, it used to be, I would list a place for rent a month in advance, or maybe I tried to list it longer, but I saw no further in advance, but I saw no benefit to doing that because everyone was signing their lease about 2 weeks before. So if I listed it 2 months early, it'd just be an extra month of showings. But now possibly with in-migration and technology, a lot of people are renting a lot sooner than they used to.